Well, it's that time of year. We're standing on the threshold of 2024, a new year brimming with excitement and possibilities, and the fun of trying to figure out which Colorado housing market predictions will actually come true this year. You know, our Colorado housing market has been on quite the roller coaster ride over the last few years. But what are the experts predicting will happen with interest rates, with home values, with housing affordability, and will we have a recession? If you're looking to purchase a home or sell a home in the Denver metro area this year, let's look at the Colorado housing market predictions for 2024 and what these evolving trends will mean for you. Last year, we saw a significant change in the housing market, with interest rates rising from 6% to 8% in a matter of weeks. That was crazy. Nationally and locally, caused a lot of potential buyers and sellers decide to wait out the market. And that was reflected in our Denver Metro 2023 year-end totals. New listings ended at 46,526 for the year, down 26% when compared to pre-COVID years of 2015 to 2019, which were more normal years in our market without a pandemic or the crazy interest rates. During those years, we averaged about 63,000 new listings per year. Pending or under contracts were at 38,930 for the year, down 29% from pre-COVID years when we averaged about 55,000 per year. And closings were 38,715 for the year, down 28% from the pre-COVID years when we averaged about 54,000 closings a year. Basically, what was happening in our local Denver area housing market was the same as what was going on across the country. We noticed a slowdown in our market. There were fewer houses available and fewer deals were being made. This shows the real impact that mortgage interest rates have on buying and selling a home. Buyers didn't want to pay the higher interest rates on mortgages, and sellers who had the pandemic low interest rate didn't want to move into a potentially higher interest rate themselves. In 2023, you might have heard the news that our local house prices were falling. And this drop was really directly related to the Federal Reserve, the Fed raising interest rates, because a higher interest rate makes buying a house more expensive, pushing some buyers right out of the market, making affordability a real challenge in 2023. Now, normally I would say that November to February is really where we would see the most price drops and the most concessions given by sellers who need to sell their homes. But 2023 was different. In January of 2023, interest rates were up to 6.6%, down from the 7.3% in October of 2022, but still higher than buyers were used to. And in February, the Fed nudged them up just a little bit higher, jumping them to 7.1%. These higher interest rates, along with fears about bank failures, really had home sale prices decreasing an average of about 3.6% from January to July of 2023. And in August, mortgage rates was 7.4%. But then something interesting happened. The Fed stopped raising rates and even started to lower them. This change made buying a house a bit more affordable. As a result, from August to the end of the year, the average price of homes began to go up nearly 1% each month here in the Denver metro area. Now, the experts had been projecting that home prices would drop in 2023 due to high mortgage rates. And, they did a little for part of the year, but they ended up being wrong. And did you see the recent Denver Business Journal article last week? They were predicting that Denver home prices for 2024 were going to drop 5.1% based upon Realtor.com's 2024 national housing forecast. Oh, and nationally, home prices will drop 1.7%. I have to be honest with you and say I just don't see it. I don't see it happening. They were wrong in 2023, and I think they're going to be wrong again in 2024. What is your crystal ball telling you? I'd love to know. Put your comment down below. You see, when we looked back from December of 2022 to December of 2023, the overall sold price of homes in the Denver metro area increased by 3.8%. That means your home's value, if you're a homeowner, went up, not down. And that's because the experts tend to ignore or forget about the supply side of the equation. Price is a result of supply versus demand for everything, including housing. Lower rates in the last half of the year helped generate demand for housing. In fact, when we look at supply, the highest amount of supply of homes for sale was back in September and October 2023 with 10 weeks supply. By the end of December, we were right back to a mere 8 weeks of supply. From my other videos, to have a balanced market, we're going to need 5 to 7 months supply of homes for sale. Anything under 5 months is going to be a seller's market, and anything over 7 months supply is going to be a buyer's market. I see a correlation between what the Fed was doing with the interest rates and a decrease in median price. But overall, despite that, locally, our sold price increased by 3.8% year over year, and now inventory has decreased. This is very good news for homeowners who are thinking about selling this year, as we're still in a seller's market. There's low inventory, high demand for housing, and your home value has actually increased. Now that brings us to the big question. What is the projection for interest rates in 2024? And as I mentioned in last month's market update, the Federal Reserve hinted in their dot plot graph that there would be no further rate hikes and that there would actually be several rate cuts throughout 2024. The Fed's favorite inflation report was released on the 22nd of December, and basically it said overall prices dropped a little bit in November, and that's the first time they've actually dropped in a month since April of 2020. And that meant that overall prices are not increasing as fast as they were before. Inflation is showing signs of declining, and it's predicted to continue its downward trend in 2024, bringing us closer to the Fed's goal of 2% inflation. And then housing costs for things like rent and home prices, they still went up in the Denver metro area, but they're moving at a much slower pace. Now, because of this information, the experts like Andrew Hunter, chief U.S. economist at Capital Economics, believe that the annual inflation rate will go back to the Fed's target of 2% in the coming months. Due to this report and these trends, some experts are now predicting that interest rates might actually drop below 6% into the 5s. Everyone is now looking forward to the March 20th meeting when the Fed meets to see if they'll reduce the interest rate at that meeting. Now, right now, they're saying it could be an 88% chance of a rate reduction. Anyone want to bet on that? What do you think it's going to happen? Go ahead, put your comment down below. And now we must talk recession. Will there be one in 2024? For most of 2023, our spending has been supported by low unemployment and increased wages, which actually outpaced inflation even though companies are slowing down their hiring. A slowing job market? Oh, that could be a good thing. Throughout 2023, the Fed had hoped that its interest rate hikes would help slow down the pace of growth in the economy and employment enough that inflation would decline without sliding us into a recession. And that seems to have worked. The Fed looked at the overall PCE, which stands for personal consumption expenditures. It's basically our shopping. It's an indicator of our overall economic health, and it's a measure of what we spend on goods and services. The Fed loves to use it as part of the PCE price index, which helps measure inflation. In the December 2023 report, the overall PCE fell 0.1%, and inflation was at 2.6%, down from the 7% peak in 2022, and it all happened without a significant increase in unemployment. Due to this, experts are reevaluating and thinking that the odds of a recession in 2024 are low. And the Fed, they signaled the end to elevated interest rates, and they're now projecting a federal funds rate of around 4.6% by the end of 2024, much less than the 5.5% it had elevated to in 2023. Now remember, those shifts in the federal funds rate translate into increases or decreases or sometimes no movement at all in the mortgage interest rate, a pattern we saw throughout 2023. For those of you thinking about buying or selling, this really means that mortgage interest rates could land at or under 6%, which is why we're all targeting that March 20th meeting of the Fed to see what will really happen. Because the big question amongst all the experts is, where will rates settle in the next several years if the Fed hits its target of bringing inflation down to 2%? Do you know? The good news in all of this is if you're here locally in the Denver metro area and you're a seller, you can rest assured that your property values are holding strong and that you're still in a seller's market. And if you're a buyer, you're just going to have to be aware that if rates drop, you may end up in a competing situation on the home that you like. The best thing you can do is to be very prepared to write a good solid offer when you get the opportunity. Because bottom line, we've seen that the crash in house prices is just not happening. And now there is talk of a very soft landing, if any, recession-wise. Hi, my name is Peggy Dursthoff with @Live Denver Suburbs, powered by HomeSmart. And if you enjoyed this video, go ahead and check out this one over here where I talk about 4 ways you can save on your homeowner's insurance. Thank you for watching, and I'll see you in the next video.